A financial crisis is looming in the next 90 days. The weakening of the US dollar is just the beginning. The real blow, the one that will shake the foundation of the global financial system, will hit in 90 days or less. That's the final window the US government is giving us. If the Federal Reserve and the rest of the world refuse to compromise, what's coming next could make 2008 look like a warm-up. Just this month alone, countless people have suffered major losses in both stocks and bonds. But within the next 3 months, it might not just be equities or bonds collapsing. It could be a total meltdown of global assets. And at that moment, those of us who hold safe haven assets will have a rare chance to realize massive gains and buy at the bottom. So what exactly am I talking about? Welcome to Global Highlights. You might forget your girlfriend's birthday, or even your wedding anniversary. Worst case, you're out a couple of Hermes bags. But if you forget this one key date in 2025, years of hard-earned wealth could vanish in the blink of an eye. That date? The last day of June. Why? Because on that day, a staggering $6.5 trillion in U.S. debt is set to mature. That's when we'll finally see how the United States plans to deal with it. Now, you might be thinking, if the U.S. can't pay its debts, what does that have to do with me? Why should one day matter so much? Here's the thing. Most people still don't realize just how serious this is. That $6.5 trillion in debt? Most of it was borrowed during the COVID crisis, back when the economy was on life support and U.S. stock markets were halting trades multiple times a week. The Fed responded by printing massive amounts of money, expanding its balance sheet, and lending that freshly created cash to the government and the financial elite at near zero interest rates. So yes, that debt carries almost no interest. But here's the catch. The U.S. Treasury only has a few $100 billion left, nowhere near enough to cover what's coming due. Their only option? Borrow more to pay the old debt. And here's where the real problem lies. New borrowing now comes at a much higher cost. Interest rates are hovering around 4.5%. Imagine borrowing $1 million at 0% and now having to refinance at 4.5%. Over 5 years, you'd pay more than $200,000 just in interest. That's exactly what's happening with U.S. bonds. During the pandemic, the government spent freely with cheap debt. But now, the Treasury's nearly empty, and a tsunami of obligations is about to crash down. America is facing a stark choice: pay up or default. And if the U.S. wants to borrow more, the world might not be so eager to lend. Back then, investors accepted near zero yields because U.S. bonds kept appreciating. But now, U.S. bonds are tanking. China and Japan have already dumped large portions of their holdings, and several American banks have collapsed under the weight of bond losses. So, would you still dare to buy U.S. bonds right now? America's Treasury is running dry. They're about to borrow again, this time at sky-high interest rates. But even with that, there's no guarantee anyone will lend to them. U.S. bonds today are like an old, worn-out house, long and fragile, ready to collapse at any moment. Sure, you can repaint it, patch it up here and there, but the foundation is still cracked. The risk of collapse remains. But here's the thing. You actually have another option. Blow the whole thing up and rebuild from scratch. In other words, if you're the U.S. government, you can keep trying to keep the bond market alive, or you can choose economic death and resurrection. Let the entire U.S. economy implode, bring down the global economy with it, and then rebuild faster and stronger than anyone else. So, what would you choose? Back in 2008, the U.S. chose to blow up the house. And now, once again, they're standing in front of a ticking time bomb, one that could trigger the next global financial meltdown. If you've ever felt the desperation of the 2008 financial crisis, or the panic when U.S. stock markets were halted in 2020, you'll understand. Those who say this has nothing to do with me are often the ones who lose everything, right at the end of June. But those who understand the game plan early, they're the ones who seize the opportunity. If you don't want to be a victim, if you actually want to rise to a whole new class of wealth and power, then you need to pay close attention, because I'll be sharing more information soon. And if you're afraid you'll forget, hit that like button so you can come back to this video anytime. So what's the U.S. government's only way out? Just one. The Federal Reserve needs to fire up the money printer. The Fed has to print money to buy up U.S. government bonds. essentially lending money back to the government so it can keep spending. And interest rates? They need to drop, ideally back to zero. But here's the real question. Why would the Fed even help the government? Because if nobody buys U.S. bonds, the government can't pay back its $6.5 trillion in debt. At that point, America would have to declare default, and every one of those bonds would become worthless paper. Every lender to America would lose everything. And if a major power like the U.S. openly defaults, the world will flee from the dollar. The global financial system is built on trust. Once trust in America is gone, the dollar will no longer be the safe haven currency. People will dump dollars. They'll flee to gold and other assets. That's when the U.S. economy could collapse unless it's saved. Gold, America's trump card. What most people don't realize is that the United States holds over 8,000 tons of gold, the largest reserve in the world. That's more than the next 3 countries combined. And that's not even counting the gold that nations like Germany have stored in the U.S. In total, America controls access to nearly 15,000 tons of gold. What happens when gold prices soar? When gold goes up, so does the value of America's gold reserves. That's why, in the second step of their strategy, the U.S. lets the dollar weaken, then pushes gold prices higher. As gold rises, they can use their massive reserves to offset the lost value of the dollar. Step 3. Global collapse, American advantage. Next, they can trigger a global shakeup through tariffs and trade policy, causing a crash in global assets and currencies. When panic hits, the Fed steps in with massive money printing to save the market. That flood of dollars starts to shift money away from gold and back into U.S. assets, bonds, stocks, and more. The perfect scenario? America lets the world burn. Then, when everything is on sale, they swoop in with a now stronger dollar to buy it all up. It's the classic rebirth, America rising from the ashes, just like after the 2008 financial crash, and again, after the 2020 pandemic. And the final move. Step 4. The American elite cash out at the top. Then they use their high-value dollars to buy the bottom across the globe. Once again, the U.S. comes out on top after a global crisis. So, how can everyday people flip the script and come out ahead during a crash? Every crisis is a giant reset, a massive redistribution of wealth. In 2008, some jumped from windows, others bought the dip and became millionaires. In 2020, retail investors were wiped out. Hedge funds? They tripled their gains. This next crisis, if it unfolds as predicted, might just be the last big chance for regular folks to make a leap. Why do so many people lose money during crashes? Those without stocks blindly try to buy the dip, only to catch a falling knife. Those holding stocks either panic sell at the bottom or stubbornly hold on, waiting to recover, which never happens. The result? They miss both the money-making dip and the explosive rebound that follows. So what's the winning strategy? 1. Spot the peak early. When the market still looks great, that's when you quietly cash out. Lock in your profits and shift to safe haven assets like gold, Japanese yen, or plain cash. 2. Wait for the crash. Don't rush in. Watch the money flow. Monitor the Fed's moves. When they start printing money, expanding their balance sheet, and slashing rates, that's your signal to move. 3. Rotate back into dollars and U.S. assets. When the market has fallen far enough and the Fed signals recovery, sell your safe haven plays. Use that to scoop up discounted U.S. assets while the dollar is still cheap. 4. Hold through the rebound. Think like Warren Buffett. Sit on cash, load up on short-term bonds, and wait for the U.S. government to pay you back, plus interest. Then, with a war chest ready, buy low and ride the wave of recovery. What should you be doing right now? If you want to seize the opportunity, you can't wait until the crisis hits to figure out what to do. Opportunities come fast and disappear even faster. By the time you're asking, is now the right time to buy? Someone else is already cashing out. Here's what you need to do now. Align your investment mindset. Understand the strategy I've just shared and make it your own. Don't just follow it. Internalize it. Restructure your portfolio. Begin shifting part of your capital into gold, safe haven assets, or defensive currencies. Then wait. Watch key dates closely. June, the U.S. faces a major debt deadline. July, potential activation of global tariffs. These are 2 critical triggers that could ignite a global collapse. Get your mind right. Don't fear a crisis, and stop believing that long-term holding always wins. That mindset could get crushed in this era. Even if the crash doesn't come, you lose nothing. You simply rebalance and redeploy. But if it does, you'll be one of the few ready to act. If history is any guide, think back to 2008. Before the financial crisis, the US dollar was dropping fast. After the crash, the Fed stepped in, expanded its balance sheet, printed trillions, slashed rates, and the dollar roared back. The same thing happened in 2020. Before the pandemic, the dollar was falling. Then came unlimited QE, zero interest rates, and boom, the dollar surged again. Why does this keep happening? Because before every crisis, US capital quietly exits domestic assets and flows into foreign markets, pumping up asset bubbles overseas. The dollar weakens. Then when both the dollar and US assets become dirt cheap, that capital floods back home. The Fed steps in, the market rebounds, and global capital follows. Other nations collapse from the fallout. US assets recover first. The dollar surges. The result? The elite use their freshly strengthened dollars to scoop up global assets at fire sale prices. The two-halves strategy of every crisis. If you started preparing last year, accumulating gold, Japanese yen, safe haven assets, then right now you're already seeing the results. Those assets are climbing while the dollar keeps sliding. That means your first half strategy, the defensive phase, is working. What about the second half of the game? Now it's time to zoom in and pay attention. In June and July, the US faces key moments, major debt repayments, and the possible rollout of global economic policies. If they do trigger another global collapse, as the scenario suggests, that's your cue to act in reverse. Oh, sell your gold and yen. Both have already risen. Convert them back into US dollars while it's still weak. Oh, wait for the Fed to step in, expand its balance sheet, print money, and cut rates. That's when the dollar and US assets begin their comeback, and you can start buying in at the bottom. As US assets rise again, keep your eyes open. If other nations begin to fall, their assets are being dumped, their currencies are losing value, then you can rotate your dollars, now stronger, into those foreign assets. A new cycle begins. A new round of opportunity opens up. The bottom line, prepare now. Even if the crisis doesn't happen, you lose nothing. You simply take your money back, rebalance your portfolio, and move on. But if it does, you'll already be in position. So remember, don't ask, is now the right time to invest when the window has already closed? Don't wait until assets have dropped 80% to start panicking. Train your mindset. Build your strategy. Start today. Everything I've shared here, I'm giving to you for free. So you can become a smarter investor. So you can break free from the cycle of fear and chaos and finally start walking the path toward financial freedom. If today's content resonated with you, please subscribe to my channel, turn on notifications, and share this video with someone who needs to hear it. If even one sentence today helped you see more clearly, then my job is done. Crisis is a disaster for the masses, but an opportunity for those who understand the game. Don't be a victim, be the one who leads.